it's very hard to gain even partial control over the ledger, and it's nearly impossible to gain complete control over the ledger. So it's easier to censor transactions than it is to make more Bitcoin, for example. But that's what this kind of represents. It's a way for humanity to have a credible, scarce unit ledger system backed by energy and backed by encryption and essentially controlled by a more distributed set of users rather than, say, 12 people at the Federal Reserve.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discuss about Bitcoin. Lyn Alden says, essentially every logistical step involved in protecting and validating the much. And after we had increased our bandwidth and upgraded our encryption, once we had more intricate organizational systems, which is similar to what happened with Bitcoin, is the first time a reliable method for settling final value almost as soon as we are able to transact. Everything moved slowly during the initial phase of human history. And then there was the historical period covering transactions from the telegraph to just before Bitcoin was created are quick, but settlements take their time. Furthermore, in the post-Bitcoin era, ultimate worth is also quick. Consequently, settlements and transactions might all go at a pace similar to, and lots of things Lyn Alden discuss. So please watch the video to end. And like, share, subscribe our channel Everyday Finance. Thanks.
I would say two things. One would be instant settlements. And so throughout human history, information and material could only move as fast as humans. So, you can't, 1,000 years ago, Europe and China could not instantly send information or value to each other. You had to move along the Silk Road to do it. And ever since the invention of the telegraph, and specifically the deployment of the telegraph throughout the 1850s, 1860s, and globally by the early 20th century, we've had the ability to send information around the world instantly, which includes transaction agreements, whereas, of course, physical settlement of precious metals and other value can only happen at the speed of matter, transportation, and more importantly, not just transporting it, but also authentifying it, basically, all the logistics of securing and authenticating that value. And, once we had more bandwidth, once we had more complex encryption, once we had more complex organizational structures, what the invention of Bitcoin is, in a way, is the first introduction of a credible way to settle final value nearly as quickly as we can do transactions. And so the first period of human history was everything slow. And then the period of history from the telegraph up till right before Bitcoin was transactions are fast, but settlements are slow. And post-Bitcoin, we're in a world where final value is fast as well. So transactions and settlements can all move roughly at the speed of light. The second thing, I think, is the ability to build a credibly decentralized ledger. So, until this point, any ledger, that is controlled by humans is centralized. So, a central bank runs the monetary ledger for their country, for example. A bank runs the ledger for their clients. And we basically build ourselves with a hierarchy of ledgers. So there's like smaller ledgers built on top of bigger ledgers. And at the foundation is the central bank. And it's just a centrally controlled ledger where they get to determine how many units there are. They can determine who gets to use those units. They could take units from some others. They could redeploy those units. And they can double the amount of units. They can triple the amount of units. They can cut the number of units in half. And what Bitcoin is interesting is that it's a ledger, but no single entity is in control of that ledger unless they're willing and able to expend so much physical resources that they can control, the majority of the hash rate. And even then, they're still stuck by the rules of the nodes, which are themselves decentralized as well. And so it's very hard to gain even partial control over the ledger, and it's nearly impossible to gain complete control over the ledger. So it's easier to censor transactions than it is to make more Bitcoin, for example. But that's what this kind of represents. It's a way for humanity to have a credible, scarce unit ledger system backed by energy and backed by encryption and essentially controlled by a more distributed set of users rather than, say, 12 people at the Federal Reserve. Yeah, as I would say, during the century and a half where that gap existed, the problem is that the only way to fulfill the gap is basically centralization. You have gold that doesn't move quickly. You have transactions that can move quickly. And so the question becomes, who do you trust to manage that gap between transactions and settlements? Because that necessarily exists in a state of credit. So who is the ultimate arbiter and maintainer of that credit ledger? And so basically, throughout human history, and especially this past century and a half, most of the physical shortcomings of money, whether their lack of divisibility, whether their lack of speed, whatever the case may be, most of those were handled with various technologies or new procedures that make them more efficient, but at the cost of centralization. So it's far easier to use banknotes or credit cards and things like that than it is to exchange gold and silver coins with each other, especially if we're operating in a complex global society. And so we give up, we get all these benefits, but we give up control towards these central entities that can control that abstraction layer, which in this modern era has been nation states and the banking systems that they control. And so what's interesting is that Bitcoin is kind of this first potential trend change, where it says, here's another efficient way to do it. And this is the first one that doesn't further centralize it. It actually decentralizes it while still giving you those benefits of speed and other capabilities. And I think that's kind of why so many people are interested in Bitcoin. From an outside perspective, if you're in the United States or Europe and your money works well enough, you're not worried about getting cut off from your bank, and you buy your groceries every week and it's not a problem. When you look more globally, it's a much bigger problem. There's 160 different fiat currencies in the world. The long tail of most of them don't hold their value, don't have any global acceptance. And so it's very hard for people to save in liquid value. We in the United States, we think, okay, so the dollar degrades slowly. So you got to buy real estate, you got to buy stocks, you got to buy all these other things. And that's, works well enough. I think I like cover in the book, there's downsides to that whole system, but it's workable. Whereas say you go to Egypt, the currency degrades much quicker. The stock market is not robust enough to put serious money into. So people put it into real estate, which is illiquid. And then you have all these like empty homes. Because it's like, if you want to save, well, go build a home, and maybe you'll be able to rent it out in the future. And so it's very hard for people in developing countries to accumulate liquid capital. Mm-hmm. And that is a friction that is significant and exists. And it's so, literally in 2023, there are doctors in Egypt. If you ask them, how do you save money? They say, well, I go to the black market. I exchange Egyptian pounds for physical US dollars. I then hold those physical US dollars in my apartment with no interest, like liability to be stolen or lost in a house fire or something. And that is the best monetary technology they know what to save in.
Wow. Because
they're not going to hold Egyptian pounds. They're not going to put the dollars in Egyptian banks because Egypt often has a dollar shortage. So they're always prone to say, okay, well, we have to take these dollars and we'll give you an equivalent amount of Egyptian pounds at the exchange rate we decide, right? So it's very hard for them. And of course, the other option is gold. This basically houses gold and physical dollars are their variety of options that they have, and none of those are perfect. And so it just shows kind of the frictions around the world, and especially then if you want to send money, it's like, well, you try to send money there and it's like, well, this service doesn't allow you to send money to Egypt. And this service doesn't allow you to send money out of Egypt. So you have to find you try a second way, and that doesn't work either. So you find a third way and that one works, right? So there's frictions both in terms of saving money and in terms of transacting money globally that, 100 plus countries, billions of people in the world encounter, that is kind of abstracted away from us in the United States and Europe and Japan. And we have our own problems with money, but on a global scale, the problems are much bigger. And it's in large part because of this gap between transactions and settlements, and therefore in order to rely on a solid unit of account, you need to rely on some sort of central entity, which in the modern era is really the Federal Reserve.